This video is going to be a breakdown of a simple, easy to follow strategy which you can use to trade gold or any asset, Forex, futures. But recently gold has been one of the best performing assets and the trading environment has created some unbelievable opportunities, which is why I wanted to create this video. So I'm going to provide you with a step-by-step trading plan linked down below that you can trade with a rule-based approach, and when followed, it will transform your trading results. Just like it has for a number of my students inside the Rise Trades Club, as well as a ton of viewers from just watching this channel. Okay, so I'm going to show you how to catch trades like this potential 20R. I'm not saying you would hold for 20R on this trade, although this member here caught 34R on gold just this week. Okay, so this just shows the strength of trading this type of momentum-based strategy during a trending environment on gold or any asset. When Nasdaq's trending, when euro dollar's trending, it's all the same thing. So I'm going to show you this simple approach. Like the video, turn on post notifications, and don't miss out on any of the future value that is coming. Okay, so let's get into the strategy quickly. You can get your copy of this trade plan in the description below. I'll also leave a more in-depth video of this strategy as well with full backtesting results. But before we get into the strategy, quick quiz, leave a comment of 1 or 2 down below whether you think this chart here is the ideal market condition to be trading a Rise Trades continuation, or whether you think this market is the ideal condition to be trading a Rise Trades continuation. So into step 1, time-based liquidity. Mark out your previous week high, low, previous day, high, low, previous session, high, lows, market structure, 5 and 15-minute time frame. All very important, and I'll show you why now. So starting on the weekly time frame, I want you to come over here, put your rate in on the previous week high, as you can see here. So I just mark that out with previous week high. I do the same for previous week low. Obviously in this situation, previous week high isn't really of any interest because we've already traded above. But then we do the same thing when we drop down to the daily time frame. Okay, so if we're looking to jump into longs today, previous day high is a potential target. If we're looking for shorts, previous day low is a potential target. And then if we trade beyond previous day low, we look towards previous week low. Okay, next up, we need to drop down to our lower time frames, and you need to use ICT kill zones and pivots by Trade for Op with these settings, and this will highlight your Asia session, your London session, and your New York session. Why are these levels important? Well, if we look back at some of these previous trades, this trade is a really good example. Where did we reject from? London highs. London highs, session highs are a very, very good time-based liquidity target. And then you can see price reverse lower. Same thing if we go over to this trade here, you can see reversal and then we target Asia highs. Price runs into Asia high and then sells off the following day. So really good levels to be looking for as targets. Step 2, fair value gaps. So essentially this is what we want to see. Okay, so we want to identify a 5 and 15-minute market structure. And then we want to wait for a pullback to a 5-minute fair value gap or a 15-minute fair value gap. Do you think that this lower high, lower low, lower high, lower low looks anything like this chart here? I would say obviously not, right? So if anyone put chart 1, you were incorrect. This is not the ideal conditions to be looking for a Rise Trades continuation. You want to be focusing on this type of market structure, okay? Higher highs, higher lows, higher highs, higher lows. Constant trending environment towards upside. Okay, so this is obviously just the inverse of this. This is a downtrend, this is an uptrend. These are the conditions you want. Strong, impulsive moves in one direction, small pullbacks into what levels? 5 or 15-minute fair value gaps, as I will show you guys in the trade setups that we're going to go through. Step 3 is obviously the entry model. An opposing fair value gap is what we're going to use for our entry when we inverse it. Okay, so we want to trade into this being the gray box, being the 5 or 15-minute fair value gap, which is obviously here. And then we've just zoomed into this leg, right? So we want to see a bullish fair value gap in this scenario created on the move to the bearish fair value gap. The 5 or 15-minute bearish fair value gap is going to be a higher time frame than this bullish gap here. Okay, so entering on momentum through that bullish gap is going to trigger shorts in this scenario. And then obviously longs in a scenario where you'd be trading an uptrend like this. Okay, so onto the entry checklist. We're going to be trading with 5 or 15-minute trend. We're going to wait for price to trade into a 5 or 15-minute fair value gap. We're going to enter on confirmation with an inversion fair value gap. So that makes sure that we're trading with momentum when we get a close through that bullish gap. And then we're going to target 2R or the next liquidity level. And the next liquidity level comes back to what? Our time-based liquidity levels. Previous week high and lows, previous day high and lows, session high and lows. You get the gist. Let's get your copy of this trade plan, trade with it with you every single day, and let me know your results, whether you message me on Instagram, Telegram, all links are down below. So first trade is all the way back to the 13th of March. This was the setup which I showed you guys in the intro to this video. I'm now filming this a month or so after I filmed the intro, so apologies for the delay on getting this video out. But essentially, this is what we're looking at, okay? There was actually 2 entries here. This was the first one, which I'm going to go through. Price has obviously been trending very well, so this looks just like I was saying to you guys at chart 2 on that example. And basically, all we're looking for is a move into a 15-minute gap. Okay, so we're going into New York session. We've got this 15-minute fair value gap. We're creating higher highs and higher lows. And basically, we're just waiting for an inversion. So we drop down to our entry timeframes, 1 to 5 minute. So we'll look for both of these to be inversed to trigger an entry going into New York session. So we need to wait for a candle body close above, which we can see hasn't happened yet. And now we finally get that close above, which now signals that this bearish gap is obviously not going to push price into new lows. And we're probably going to respect this 15-minute gap and trade higher. So here we can enter longs, stops down below, and then we can target higher prices, whether that's a 1 to 2 or you want to target further levels. So this target here coincides with all-time highs. As you can see, if we zoom out, we can see these all-time highs over here. Very obvious target when we're trading so close to it on gold. Gold is obviously in this very long-term bull trend, so you can approach it with a very bullish bias as long as you're seeing that on, multiple time frames. So 50-minute gap, 5-minute inversion. Let's see how this plays out. You can see we run and obviously hit 3.4R into all-time highs. So obviously with gold and its very bullish bias, you can obviously stretch your targets a little more as well. A lot of people had a target of the round number 3,000 for gold in this particular scenario. So it just shows the power of obviously catching your entry using the RTC method and then obviously stretching that out, holding overnight. And then you can see price was hit for 3,000, which would have been your target had obviously you had that wider outlook on gold. So on to trade 2, we've got a reversal from Asia high, obviously a market structure shift underneath the previous higher low. So now we're looking for short setups, okay? What can we potentially target if we get a short setup in this scenario? Well, if we refer back to our rules, step 1, time-based liquidity. We've got that drawn on in terms of Asia low, right? That's the next level that we'll be looking to target because that is below current price. So we obviously follow 50-minute market structure. Lower lows, lower highs. We've got this 15-minute gap here. Now we need to drop down to the lower time frames and look for a potential entry. So when price pulls back into this 15-minute fair value gap, we'll be looking for an inversion towards the downside. So we need a bullish fair value gap. At the moment, you can see we've got this bullish gap, but let's see what happens once we trade into that 15. Okay, so there we go. 4-minute inversion, as you can see here. Fair value gap into that 50-minute gap. We inverse that, and now we'll be looking to take shorts towards Asia low. So take shorts here, stops obviously at the highs, TP at the lows. Ignore the sizing of these trades, but yeah, you get the point. And obviously price plays out very quickly there into Asia low. But it's again, you're following 15-minute trend. You're trading with momentum, 15-minute momentum, and then we wait for momentum to come back in with an inversion and target what? The next time-based liquidity. This is why we used step 1, time-based liquidity. It's why we use fair value gaps, and it's why we have that entry model, okay? We're trading obviously into these key levels. We're trading from these areas of interest, and then we are getting into the trade when there's momentum present with an inversion. Okay, so all of this adds up to a very high probability model. So let's take a look at another example. You can see here we've got Asia high above, London high above as potential targets. You can see we've had a sweep of the low. We've shifted bullish on the 5-minute time frame, and we've got 5-minute fair value gaps below. So you could just join these together and just say, okay, if price trades out back into this one, I'll look for longs. If price trades into this one, I'll look for longs. It doesn't matter which fair value gap gets rejected. Okay, so drop down to lower time frames. We're already in that gap. We need to look for an entry at this point. 1-minute inversion potentially here. I wouldn't enter on this. We haven't had a body close above. And now we have. Okay, so clear momentum in the market. We can expect that this 5-minute gap here is going to deliver price into new highs. So where can we target? Next liquidity point using our time-based liquidity being London high. So stop at the low, TP obviously at the highs, and then we'll be looking for a trade higher into that time-based liquidity level. As you can see, London high gets taken for plus 4R potentially on this trend continuation. RTC with 5-minute trend. Okay, so on to the next example when one of our members actually caught 34R from this trade. Another member caught 4 to 5R on this move. It was something we spoke about during New York session, the potential to pull back into this 15-minute fair value gap here and obviously continue the momentum. Okay, once again, compare this to the charts I showed you guys earlier. Does it look like this one, number 2, or does it look like this one, number 1? Obviously, it's going to be this one, number 2. Huge bullish momentum. So we can see price is now pulled back into that 15-minute gap. We now need to look for opposing fair value gaps. So we've got this bearish gap here. If that gets inversed, obviously momentum coming to the market, and we're looking to take a buy setup a little bit like this, okay, targeting previous week high because that's what we've got above. You can either target the current New York session high or previous week high if you've got strong conviction. Obviously, massive bull trend on gold at the moment. These are the moves that are possible. So waiting for an inversion of this bearish gap. There we can see we get that inversion. Entry on there, obviously stops at the lows, targeting that previous week high. Let's let this one play out. And there we have it. You can see this trade played out for 7R. Obviously, another member caught 34, holding this overnight, maybe a smaller stop. I'm not too sure, but yeah, crazy move. Obviously, Asia pushed us into that previous week high. Obviously, you didn't even need to do that. You could have just targeted New York session high for plus 3R in the space of 2 hours. So really clean move. Obviously, trading with trend. Nice rise trades continuation model. So we'll finish on this trade the day after, obviously, that move into previous week high. We're now above previous week high. We've got a 4-hour fair value gap above, something that which obviously could act as a magnet for price to draw into. And essentially, we're trading back into this 15-minute gap. This is one that we mentioned on the live sessions. You can see on the 5-minute, we do have this gap here. So if that gets inversed, we'll be looking for longs. And now we've created a new 5-minute fair value gap. So now we'll be looking to get long on this gap. Okay, as long as this 15 minutes holding, we're looking to jump into longs. And there you can see we get the close above this fair value gap, creating that inversion out of a 15, stops at the lows, targeting, 2R, 3R, just that 4-hour gap, wherever you want to. So entry, stops, targets, let that play out. You can see, again, entering with momentum. One thing I want to say before I finish up this video is not every single trade is going to look like this. I'm showing you guys textbook setups because I want you to understand what this model does in a normal scenario. Okay, in an ideal scenario, this is the way the market plays out. If not, we manage it. Okay, we have certain rules for managing trades and protecting our stops against, consolidation periods. Okay, so I'm showing you guys ideal scenarios. You can take these trades away, create a booklet of trades that you want to try and replicate in live markets. Okay, try and recreate these trades in current markets. All of the time, your best trades are going to look like your previous best trades. You're just going to keep doing the same thing over and over again. Okay, so some really good examples. If you've got any questions, leave them in the comment below. If you want to join us on the live streams every single day inside the Rise Trades Club, then jump over to risetradesclub.com, link down below. We're going to be capping the monthly memberships at 100 maximum traders, and there's going to be a limit on how many traders we take in on lifetime every single month. I shall see you guys on the next video.